All right. Good morning, everyone. We're gonna get going here. All right. We had a huge move yesterday evening in the U.S. on the back of the FOMC minutes release. Happened at 8 o'clock our time. You can see there at 2000. You can see we had a real sell-off initially. I think we got down to almost 1% down on the S&P. And then we spiked up through flatline. We actually went positive on the day. And then really the last sort of half an hour, again, we saw a really weak finish on the S&P. Really sold off quite aggressively. You can see every sector across the board was down. So I'm not sure how much you can read into this. The market didn't have that much time to react, and you can see the reaction was a little bit mixed. I think the bottom line is that we have a little bit more clear idea that everyone at the Fed is on the same page, that we can't expect tapering probably relatively soon, and that the market is reflecting that through higher interest rates in the bond market. So we'll have to see if it actually comes next month. But the market's actually handling this, I think, really well. I mean, I think the market expected this. Let's put it that way. But I don't think that we haven't had a significantly adverse reaction to this. So things don't look so bad at the moment. All right. Asia markets were pretty much down across the board. Some of them were in the green a little bit earlier. I see Japan actually closed down almost 0.5%. Hong Kong closed about where you see it there. And I think actually China was up a scrap. Chinese had its HSBC manufacturing numbers that actually showed growth this month for the first time in, I think, 6 or 7 months, or the best number in 6 or 7 months. And so I think that's kind of giving support to some things like copper here, and probably giving a little bit of support to equity markets for the day. All right, we've had several companies that have reported earnings today already. We've actually got a couple more later, I believe. We had Exaro that was out with headline earnings per share at 7.12. That's all first half numbers. They had guiding in the trading statement is around 6.77, so that looks like a nice beat there. The revenue number versus the Bloomberg expectations is a miss. However, I'm not sure what the market was expecting versus since the trading statement. Divi per share looks like a little bit of a beat of 35 cents at 2.35 versus 2 rand. Then we've got Massmart that really is quite weak. Second half headline earnings per share at 2.25. The market was expecting as high as 3.69 before the trading statement, which it's already taken a beating since then. But they got it at 2.26. It's a small miss there. The revenue number obviously a big miss from what the Bloomberg expectations were previously, and then the divi per share is also a miss. So I think that there's probably a real likelihood that a lot of that's priced into Massmart already as hard as it's been hit, but we'll have to see how that plays out today. Goldfields, another set of shocking numbers out of one of the gold miners, similar to Harmony, showing a 1 rand 5 cent loss on Goldfields. We also saw a miss in the revenue number at 604 versus 621, and they're paying no divvy, and the consensus was for a 40-cent divvy to be paid. So the gold production was down 5%. You would have obviously expected that. That's probably a big part of their loss due to the all the turmoil that the miners here have been facing. And then their notional cash expenditures were as high as $12.39 per ounce. So it's below the actual $1,239 per ounce. It's below what the gold price is at the moment, but it's really on or about where the lows of the gold price were as recently as 3 or 4 weeks ago. So I think that's really important that you can see that basically the all-in cost for them to produce an ounce of gold is so high, and I think these things are going to be under pressure until they're able to get that under control, or until the gold price really has a sprint. Okay, and then later we've got True Worth that's out as well. They guided a little bit lower than consensus at 565, so we're going to wait for that to come out later. The revenue, they actually upped the guidance on the revenue in their trading statement to 10.1 versus 9.89, and then the divvy per share is expected to be around 1.70 rand. So watch out for those to come a little bit later in the day. All right. We have, like I said, the HSBC manufacturing numbers out of China, which were a nice beat there. It was above, every economist's expectations, so I think that's giving us a little bit of support this morning. We had Swiss watch exports out this morning. What I think so interesting is to just see where the pockets of strength and weakness are, and you can really see that in Asia is really where the weakness is. The total exports were only up 2.2%, which is not spectacular, but you can see that we're starting to get a turnaround out of most of Europe. I think Italy is a big piece of that index, and seeing as how they have numbers higher by about 10% is significant. We've got PMI manufacturing numbers from most of Europe out today. And then we've got initial jobless claims in the States, which will be probably the big one. But then the other big focus is going to be the Kansas City Fed Jackson Hole Economic Summit that's going to go on today. We're going to get some commentary out of that, and that'll probably continue to shed a little bit of light on what the Fed's policy is going to be going forward. All right, let's jump into the maps. Okay, first thing I wanted to have a look at is the ZAW. I'm zoomed in a little bit, obviously, there. You can see on the longer term chart, quite definitive. Let's just zoom back in. This one's relatively straightforward. I'm just going to work it off the close, just to, because this is the worst close that we've had on the rand going back multiple years. Obviously you can see where the wicks are. If I was to draw it at the wicks, I'd maybe try to draw something like that. But bottom line is, we did close, and we actually traded at the weakest level last night on the rand in years. So this is really important. You can see here, I would take this little range from about 968 to 925. Let's call it 55 cents. We'll project us out to around 1075 to 1080 on this breakout in the rand. So I think what's important to realize is this is not just local currency that's getting hit. The entire emerging market basket's getting absolutely slaughtered. You're seeing it in the rupee. You're seeing it in you've even seen the Australian dollar. So commodity currencies have been getting hit as well. You've seen I think the Thai baht, in Indonesia, you see across the globe, emerging markets currencies have really been decimated. I think the Brazilian real is actually the worst of the lot. So it's really important to realize that this is a play that's going on here, and I think what this is being driven by is strictly it's a yield play. As yields in the developed markets are starting to rise now that the Fed is going to be tapering, you can see the 10-year U.S. Treasury yields are really starting to rise, and because of that, people don't want to pay the same price for local bonds. So the selling or the weakness in the currencies are really coming from the bond market. They're selling the bond market because they know yields are going to be going higher. And essentially that's forcing the rand lower. So I think at some point all of these emerging market currencies will probably have a nice rally back to some sort of consolidation in these levels. But the bottom line is that it may continue to go on for a little bit longer. All right, let's look at ARI. You can see there on a longer term chart a little bit of a continuation pattern, and we talked about this one a day or two ago, just north of 183. Really, we had multiple tops on this. We really broke out from this nice little bull flag, and I would say that we can probably project out about $6 or $7 of upside here from the breakout of this pattern around 183 and a quarter, call it. or 183.5. And so I would put us up around 190 as a potential target in ARI in the near term. This thing has run incredibly hard, though. I mean, it just came from 147, ran only 20 trading sessions ago, so just be careful. Right, let's look at growth point. This is kind of yesterday. It was the one that we talked about, and we said we wanted to really focus on. This level at 2350 is incredibly significant. This is being, I think, driven purely by interest rate spikes. The fact, as interest rates go higher, these shares continue to come under more and more pressure. A lot of the other stocks in the sector the charts look almost identical. I think it's also some of the pressure we've been seeing on retail, just purely coming from the rise in yields here locally. Again, this morning, you can see that yields are continuing to rise, up about 1% this morning to 867. This is really important, and I think it's one of the biggest drivers in our entire market right now. So it's really important that we continue to pay attention to this. But bottom line is, this thing, the target on the breakdown here can be significantly lower than this. I don't know how low it can get. I would assume people have been buying into this, and maybe some people on the long side here. But the first sort of target that I'd probably put here would be about 2120, which is quite a ways lower than this on growth point. All right, we'll look at Sassel. I'm actually going to look at a year chart and just zoom it forward a little bit. This one's a little bit rough, but definitely putting in some sort of flag pattern here. We've been seeing a lot of these bull flags in the market recently, just due to market action, and I think the underlying market's kind of setting up some sort of the same trends. You can see there we broke out a little bit yesterday. What I'd like to see is it get above the previous highs, which are just south of 480, to really take us on a quick move up to 500. And with this weak rand, you would think that would be easily justified in the near term. All right, I'm going to look at Anglos here. I'm going to look at it in the London price, just strictly because the rand's been hit so hard that it makes the chart here a little bit more difficult to look at. I'll just zoom out just so you can see the longer term picture. But if we go back forward again here, I'm going to focus on the just trend line support here, which we're basically sitting on as of yesterday's close. I think this is something to watch here, because if we drop these levels, Anglo is obviously going to have a reasonably lower target. It'll be breaking down essentially out of a longer term wedge pattern. I think what's important is to see today what we can do off of this level. Obviously, like I said, in rand terms, this chart is a little bit more difficult to follow. It's probably not as true to the actual to the technicals as it should be, because of the rand such a factor. All right, let's have a look at Harmony here. Harmony, if you see there, we're still zoomed in here a little bit, but 42, major level in Harmony. I mean, look how many touches there are. This is where we broke down from originally, when we took us all the way down sub 33. We came back up. We had 1, 2, 3, 4, 5, 6 days in a row where we topped out at $42. We've made this move up nicely from around 32 up to 42. We failed it now 2 sessions in a row. Obviously, yesterday's sell-off in the shares in the States are taking us lower than this. The weak rand has given it a little bit of an artificial boost in the meantime, but back up around 42. If you're looking to fade the golds, might not be a bad place to sell some Harmony. And last one we're going to look at here is British Aerospace in London, and really just same sort of thing as we're seeing quite broadly in the market at the moment, setting up a longer-term flag pattern, potentially to make a breakout here to move higher. So I would say just watch it around maybe 445. We can get north of 445 on a closing basis. This thing could maybe make a move to new highs on the year. That's it for today, guys. Thanks a lot.